Welcome, everybody, to the FreightTech Fanatic podcast. I'm excited today to be joined by Johnny Bond, CEO of FactorCloud, John Tozer, COO of Newtrul, and of course, I'm your host, Spencer Mitchell, CEO of TruckerCloud. The FreightTech Fanatic podcast is brought to you by TruckerCloud.
What's up, Freight Fanatics?
John, Johnny, great to see you guys today. How are we doing?
Doing great, Spencer. Can't wait to dig in here.
Thanks for having me, Spencer. This is great. Thank you.
Tell us a little bit about Newtrul and what you guys are trying to solve in the industry.
Yeah, for sure. Appreciate it. So Newtrul, as the name sounds, is, at least at the time, about 4.5 years ago, was new. So that's where we got the NEW, but it's also neutral. So unbiased, taking a Switzerland type approach to a specific niche in the marketplace. And the niche that we focused on at the beginning, or the problem that we were looking to solve, was how to digitally match the right broker with the right carrier. And so where we started was an over-the-road, full truckload spot freight, really focusing on the dry van, reefer, flatbed. When I say over the road, I mean the long haul. Most of the folks, because we are freight fanatics here, right, know what I'm talking about there, but that's where we started. Not only did we take that neutral approach where we don't want to take a margin on each side, but we tried to differentiate ourselves a couple of different ways as well. So we predicated everything on APIs. So it has to be integrated into a system of record on either side of the marketplace. So it has to be either a broker TMS or a carrier TMS. On the carrier side, we started with a UI, so the carrier can interact with loads, digitally book, bid on loads that way, or leverage a lane alert type preferred lane functionality where they get the right load in front of them fast. So that's how we started there. And what we were trying to do was we were trying to do what all marketplaces in general are trying to do, and that's improve the convenience or provide a convenient solution that is trustworthy. And where we saw a lot of problems was with the trustworthy side. It was convenient to use some of your Craigslist type marketplaces where you could see a ton of freight and you can call a ton of folks on it, right? But you had to sift through the noise. And so one way we were trying to combat that was, hey, I want to integrate into a system of record where I'm pulling real freight and I'm connecting you with your already set up network. So you have to have an association in order to digitally book a load. We'll send you a bid if you're outside of the network, but in order to actually transact, you have to pass a compliance layer, if you will.
Thanks for the background, John. I know some of this because we've talked deeply about businesses and business models, but I want to dive a little bit deeper into y'all's differentiation because a lot of it is API driven and you didn't take the easy way out with regards to like a convenient marketplace. Hey, we're going to be like a Craigslist where you're going to be able to find a load, but is it going to be real? Is it going to be some catfish scammer? Is it going to be various things? So when you say it's API driven and it has to be tied into a system of record, tell us a little bit more about that, or like what's your customers' experience from that? Like what are you eliminating when you create that experience on the broker side and on the carrier side?
Yeah, it's a great question. And there are a lot of catfishes out there right now in freight. And I think that's one of the things that's, I don't know if the actual term catfish is trending, but definitely the double broker and the fraud is trending right now. So it's how I joined the industry. I actually, and we might get into this a little bit later, but started my career in the military and transitioned into logistics. And the first place I went was a mid-sized freight broker and kind of watched how they booked carriers and managed freight, and it blew my mind. I mean, they sift through a lot of fraudulent calls, a lot of noise. Sorry, I digressed a little bit there, but back to your question is we call it private first. So we integrate into a TMS, so we're only pulling freight that has been won. I think the terms that they use is non-com or truck in hand. It's not freight that you're looking to find a rate on. It's freight that, hey, it's dedicated from a shipper. You have won that freight and you need to find a carrier for that freight. So we have specific constraints within our API that kind of filters out the stuff that's not that and only takes in the freight that has a order number, PO number. It has to be in an available status. It can't have a carrier booked on it already, right? In most of the cases, it has to have a rate on it. This is the target rate that you can book it for. And then in order to book it now or in order to transact on it, we also have an integration with our TMSs that takes the carriers that they have in a active status that's not in a DNU status. DNU is do not use, not authorized. There's different kind of terminologies for those in systems of record. Most of them are DNU. I think that's kind of the industry standard, but industry standards change all the time. So who knows if that's going to be the case tomorrow. And so what we do there is we took that approach and once again, to your point, it was difficult. It was long. It was painful. We pulled a couple of our partners across the finish line, and some folks are pulling us across the finish line. Fortunately, I have a very intelligent and lean team of folks that can adapt quickly and allow us to adapt to some of those changes very quickly so that we can ship code, ship software, ship solutions very, very quickly for those changing dynamics.
So one more question on this, and then we can keep moving on. Newtrul is better for the carrier because essentially you have brokers who have already won loads. It's not that you have 10 brokers that are trying to find a carrier for the same load, and the first one to get the best rate sort of wins. The brokers have already been awarded those lanes with those loads. So it's better for the carrier because if they agree to something, generally it's going to be agreed to, right? All parties agree. And then it's better for the broker because partially, I think you mentioned because it feeds into their system of records. So you're sort of pulling and pushing from the system of records, right? So they're not continuously updating there. It's almost like you're closing the loop on the transaction. If carrier books it and the broker agrees, it feeds back into the broker system of record. So everybody within that brokerage knows that freight has already been awarded. Somebody's picked up. Yeah.
Spot on.
Got it. And then benefits for the shipper? I guess just better communication, right?
A couple things. The first is your cost to serve. So there's a lot of numbers out there. I'm not going to quote a specific one. I have ones that are fairly agreed upon that depending on the size of your brokerage, you're spending between $50, in some cases $150 to find a truck for a load. Is that some folks are doing it better, some folks are doing it worse, but let's just take that as kind of a foundational baseline layer. If you have the Newtrul solution integrated, we're going to pull that freight over zero touch. We're going to find a carrier for you. In some cases, it has the rate and they're booking it now. We've eliminated at least that cost to find the truck. So that's the immediate value add for the broker and the shipper is we find somebody that's in your network and we allow you to reutilize them. One of the things that I saw just today, like new carrier setups for the vast majority of brokers out there, 50% new carrier setups. So the trend that we're seeing right now, or the trend that we've been seeing for the last quarter, is criminals are very good at being criminals and they're getting smarter and they're getting better. And so there's a lot of fraud out there. And so we see that. The natural thing that a broker is going to do to combat that is, hey, let's use the folks that we trust and use. Let's reuse our own carrier network to the max extent possible. So we're going to do that. But we're still seeing new carrier setup. 50% of freight that went through the market writ large was a new carrier setup. I think it was last month. So we see these trends. We know we need to get those numbers up to 60, 70, 80% reutilization. We're just not there yet. And so that's where Newtrul comes in. It's another way of getting you stickier with the folks that you trust, that have been set up, that are in a good status with you. Because a lot of that time and money that's spent, especially right now, and I've been there, I've been at brokerages. The last 6 months, I think I've been to 54 brokerages, but I've been to a lot of brokerages over the last 6 months. And the compliance process is the one thing that always sticks out. It's like, whoa, that's still fairly manual and fairly aggressive. But I get it. It's because think about it. If a load, I mean, folks on that are listening to this know, depending on the size of your brokerage, you get a load stolen, like that's it. That might be it, depending on the size of the claim. So you can't mess around with that. The natural progression of marketplaces, at least in the past, has been, create a more convenient and trustworthy apparatus for people to interact or transact, right? That's the first step. And then the second step is usually give them the tools to manage those interactions and transact better. And so that's kind of where we're at right now, is we've built out what we call the broker operating system. We're now going to market with it, where we're giving, so in the past it was, hey, zero touch, which it's still zero touch. You can leverage the marketplace and find the right carrier for your load and get them to book that load, digitally without touching anything. But you can also go and you can now leverage insights. So this is anonymized and aggregated data to tell you, who you should be booking on what lane for what. We've also built out a carrier CRM so you can manage your carriers more effectively. We find that this layers really nicely on top of just about every TMS, which allows you to kind of manage that freight. And then you want another thing to probably manage those carriers. And so this is our what's the word I'm looking for? This is our answer to that problem. And then the third piece of that is we enable kind of that digital booking passively, but now you can actively go out and seek folks in your network. So that's kind of how do you put together the tribal knowledge that you have and then scale it via CRM with the insights that we have to find that right carrier and actively go out and find them, as opposed to just letting the marketplace find that carrier for you. This is particularly important for those, like hot loads, for those, day of type things.
Yeah. 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 That I could see that where that would get people in trouble is like when you have to get a load covered quickly, there's the potential, not necessarily to cut corners, but like to miss something, right?
Yeah.
And you have a book of, managed carriers, pre-selected carriers, ones that are vetted within a system, them, you've worked with them before, and you can see that somewhere else in Newtrul that they've run a similar lane before, and maybe they happen, maybe their home base happens to be around the pickup spot or something like that. I would imagine that that's super helpful and sort of eliminates the potential for fraud.
And that's exactly it. You're spot on. I mean, that's one of the modules in there. It's interesting. I don't know if it's funny, but like one of those 54 brokers that I visited at the beginning of this year, I asked one of the reps, like, how did you know to call that carrier? And she had a sticky note, like on the back of a notebook that she had. Oh, well, I just wrote this down the other day that this carrier runs, like Atlanta to Montgomery on Wednesdays. And I was like, is that where you have it? So you have like 1,000 sticky notes everywhere. And this information dies right on that sticky note. And that's how some fairly large, like 40, $50 million brokers, that's how they're operating.
Right.
So there's a lot of opportunity, right? Like that's the beauty is that's something that I can help with. And that's a problem that I think most folks need to solve. If not already, they'll need to solve it soon. But
well said.
Yeah. So John, I always ask this question on the podcast as it's sponsored by TruckerCloud and we're, one to many telematics, TSP, ELD aggregator. It seems like there's a lot of natural overlap between, what freight brokerages do, the platform that Newtrul provides, and the sort of streamlined ease of integration, ease of use for brokers. But how do you see telematics playing into the ecosystem that Newtrul facilitates either now or in the future?
Yeah, I love it. And I love what you're doing at TruckerCloud. I mean, I think we started talking a few years ago now and used, I think the analogy was plaid for ELDs.
You were one of the first ones I think you were the first to say that, by the way, which is like a great analogy.
Yeah, it just makes sense to me. Like it just made perfect sense. And so really, really love that. Where I see, and I had mentioned it before when we talk about kind of the different variables that you're going to leverage in order to digitally freight match, right? And one of those, none of those can be used by themselves, I think, effectively, but when you're starting to weight them properly, and a natural one is raw lat long. A natural one is some of that telematics data that you get, right? That's one of those kind of, at least to me, it becomes another variable in finding the right truck, the right person, getting the right freight in front of the right eyeballs, right? So that's just that to me is kind of like foundationally where you can start with kind of some overlap and some value, some mutually beneficial value adds, right? Where it gets even deeper, I think, is how some of our integrations can be leveraged to push the right data to the right people. I know you guys are phenomenal at getting those integrations into the right places, but it just widens the market out a little bit there. So I think there is a natural overlap and some natural business. I'm struggling because I want to say the word I don't want to say the word synergy, but the word synergy is probably the right word for this. And so, yeah, I think it becomes natural where we start to add some value to each other at some point in the future.
The one thing that it seems like it's still hard to figure out is, if you're matching freight, is the loaded versus unloaded component. Yep. Like if you know where a truck is, sure, here are some loads nearby, but you never know whether it's loaded or unloaded. And I was actually thinking about some things recently. Like you could take there isn't a good way to know that without being in a carrier TMS, but a lot of carrier TMSs don't have that. So one of the potential ways to figure that out is I was just looking at some data today. You could actually take the lat long and sort of trace a vehicle. And if that vehicle has pulled off the highway, because most of the time they're traveling, on the highway, if they've sort of pulled into like a distribution center, that could be, if they basically pulled off the highway and it's not a rest stop or it's not a gas station, they likely went to like a DC. And that's sort of a time where you could say, hey, well, there's a 25% chance that they just got unloaded. Hey, let's present something, or let's present that vehicle or something like that. Like, it's not that hard. And there's actually companies like, we just had Lucas from Kestrel Insights on the pod like a couple of months ago. And that's one of the things that, he could do is basically like say, hey, were they in a DC recently? If so, 25% chance that truck's available, right? There are other ways to solve this, but that's kind of like the missing link, I feel like right now.
Yeah, that's one of them. You add a little bit of like POD documentation or Raycon or load level details where we know
Right.
like the drop off time is at this this time at this lat long, and then you match that. I mean, now you have a pretty powerful, and now you can say beyond the 25%.
Yeah, exactly.
Something that we've been hyper focused on, like the factoring space, is fraud. And the last 6 months have been really, really challenging across the freight industry. Would you say that this challenging environment has been beneficial for your business model? Are you leaning in on these trends, or is it still stunting your growth as well, like most of the other players in the space?
It's a little of both. So we took a very targeted approach to that problem. And so it has helped, particularly over the last quarter. So it's 2 quarters ago, it stunted us. And then last quarter, one of the things that marketplaces do very well is they police bad actors almost as a function of the marketplace, right? You eliminate bad actors. And so some of the things that we did on our end is we instituted policies, and this is where like algorithms to look at, hey, when particular brokers DNU a specific MC within a certain time period, let's see if 3 of our customers do that within a specific time period, and let's automatically look at that person, because that's one of the leading indicators, right? Because all these brokers aren't talking to each other, but the marketplace can tell us that.
I don't know, John, if you guys are thinking about this yet, but the hot topic that we see is AI. Are you doing anything or planning to do anything with AI?
Yeah, I think it'd be a little silly not to plan on doing something with AI. Where I struggle right now with AI is how much of it's really AI and how much of it is RPA or bots or things that are already out there, and then it's just making those slightly better. I guess where I'm at right now is we are looking into ways to enable the operator with AI. But are we going all in on anything? Or are we willing to share anything right now? I think it's slightly too soon. I'm still personally trying to leverage AI for my person first and my business first, and seeing how I can find the real savings, the real time savings, the real cost savings with AI. And I think once I can do that, then I can scale it in other ways. But yeah, how are you guys looking at it? Johnny, you probably are, and maybe I'm just assuming here, but you might be on the forefront of that, or how you would leverage some of your solutions with AI.
I don't know if I'd say we're on the forefront of it, but like we're definitely looking at how we can use it. Anytime there's a human in the loop, a human in the process, we're trying to figure out if we can replace them with technology. So if it's sending an email, ingesting an email, and then having a reply to that, in theory, we should be able to find some model that can replace that. If it's pinging a load board to see if, what we're reading on a document matches the load board, we should be able to automate that. And then it's taking all the data and seeing where the outliers are. So if we're used to seeing certain lanes running $1,000 per load, and all of a sudden we've got one that's $6,000, that should be a red flag. So we're trying to leverage AI for analytics and then for automating tasks that have traditionally been offshored. I think it's like the first movement was offshoring, the second movement was reshoring, and now it's like we can just totally get rid of all those people altogether.
Yeah, I love that, man. I think the big piece of that, and I'm sure you meant to highlight that, but the big takeaway that I had there was the repetitive tasks that don't interrupt the relationship. Because we all know when I first started this 5 years ago now, I saw automation, and prior to AI, I saw all of these things where we can replace the human. I was so wrong, dude. I was so wrong. Like, that relationship is so important. I don't know if I've ever been more wrong about anything in my life.
You mean the human relationship?
Yeah, the human to human relationship. So critical. But there are repetitive tasks within that human to human relationship that AI is perfect for. You hit on it spot on, John, right? Like repetitive email tasks, repetitive reach out tasks, repetitive tracking tasks, right? Some of these things in the freight industry that are monotonous, that, to your point, were offshored because they can be done much cheaper. Those are the tasks that enable the relationship. And that's where I think it truly lives, taking big truck lists and taking them out of an email and putting them into a CRM and then being able to act on those.
Yeah, I agree. I think that we are maybe closer to a world where AI can have like a softer touch than we might realize right now.
I don't know if a lot of that, like the email type of stuff is, it depends on what you wanted to say, but like a lot of that you can automate in other ways. John, you were saying like, I don't know how much is AI versus RPA and other things like that. If you want the AI to generate something novel and sort of respond to an email, like respond in customer success, that sort of thing, maybe that starts to become AI, or starts to use the language models, right? From my perspective, the most valuable thing that might come up is actually improving models and algorithms without having a human in the loop, saying like, hey, can you improve this algorithm for me? Can you improve this code for me? Can you improve, like Johnny, you guys work with it on the invoices side. You guys built a model to understand invoices, and now like, how could that be improved? We're almost to the point where you can just ask AI to go, hey, can you improve this model for me? And then, John, you guys have a ton of data, right? Could you improve the matching algorithm here for me? And then explain to me what you did, because you don't want it to be a black box, but like, tell me why you did what you did.
And I think the second piece of that is, can you test? I think that's what you're saying by improve. But to me, I always have to go like one step deeper for me to understand, because I'm usually a little bit slower to understand these things, especially when it comes to AI and really complex problems like that. But it's like, hey, I have these 7 variables, and I think this one's the most important, but I'm not entirely positive. Like, it is the most important for this user. It's not the most important. I need you to test these variables as quickly as possible. Send out this type of match to this person based on this variable, and then iterate on that as quickly as possible, so that I don't have to set up all the different A/B testing for this. I just set up one test there and it does the whole thing. Newtrul can tell us when we have a single MC getting DNU by multiple folks. That to me, it should be at least a yellow flag, if not a red flag.
Right.
And that's one of the ways that we kind of started looking at that.
Can you are there ways to identify a bad carrier or a bad actor even before a broker DNUs them? Is there something that says, hey, this carrier's reached out on 8 different loads in the last 24 hours and they have 1 truck? Something's wrong here? Like, is that where you can go?
And that was kind of the tipping point for us, is we had a very similar situation to that. We had somebody that made it through some of the registration stuff by changing 1 letter in the domain of their email. So like I said, criminals are clever, and they're going to get more clever as time goes on. So yeah, they changed 1 letter in the domain of their email, and they immediately started acting weird, right? We started seeing multiple bookings for a single asset, multiple biddings for a single asset, and they were just looking for that. They were looking for 1 to get through. To your point, even a human and myself could look at that and be like, that's not normal. But you throw a little bit of technology behind that and you could automatically deactivate them, which is what we did there. So yeah, that's another piece to it. The other piece to it is the folks that are leveraging Newtrul, we consider all of our customers partners, right? We're trying to create this solution to give them money back in their own pocket. And really, when we get right down to it, we're looking to improve their EBITDA numbers, right? And so one of the things that we have is a master double broker list. And we have that essentially like folks that we have identified over the course of our business that, hey, these are just MCs that can't book on Newtrul. They can't come on Newtrul. And so that's built into our onboarding. We have kind of thousands of MCs that even when you try to register, you're automatically blocked. And when I open up my CRM, I can see like if I'm going to manually approve somebody, which I don't do anymore. But when I did in the past, like if I was going to manually approve somebody, I could see if they're on that list or not.
That'd be a great list for us to borrow at FactorCloud.
Yeah, Johnny, I was going to say the same thing. Yeah, Johnny, I was going to ask you, how are factors dealing with or thinking about fraud as well? And I was just thinking the exact same thing. I was like, John, you guys should share that list with any factoring company, any factoring software, these sorts of things.
Yeah,
because I know it's a huge thing at IFA.
Yeah.
I think that's a great place for us to work together, right? Because my inclination is also at the factoring solutions, any payment solutions provider also, and that's where we're going and where I think the industry is going. If you've had folks where you can trust the payment process and you've seen that go through multiple, right? There's integrity associated with that. Right. And so, Johnny, let's definitely connect right after this and we'll talk about how we can get stickier with one another and work on making sure that, because that's really all that matters, is providing value to folks in the industry, making it a better industry in general.
I think what we're seeing is the biggest trend that everyone's hyper-focused on is fraud, double brokering, and protecting yourself. As it's becoming a tougher borrowing time, it means that spreads are decreasing and everyone's just really, really focused on protecting your business and minimizing your losses. And this kind of goes back to the conversation we were having earlier about AI and how you can take something like Newtrul or any sort of data set and flag outliers. So if you've got that list of carriers that you know have done double brokering in the past or repeat offenders, that's an easy one you could ping. But for us, it's finding little things. If we've got information on lanes and we know that an invoice is submitted that's got data that's just an outlier, like, $6,000 as opposed to $1,000 that lane would usually be, like, that's a red flag that we can immediately make sure to call attention to. Or like discrepancies on certain invoice numbers or load numbers that don't match up with the broker that typically is issuing those pieces of paperwork. So we're trying to figure out how to remove the human in the loop. And partners like you guys or anyone with access to really relevant data makes that a lot easier. I'd love to get your thoughts on just the market in general, if that's all right with you. What are you seeing in the world of freight rates?
It's volatile. That's the first step. If there is a freight VIX, I think that I'd be going long on that. If you're familiar with the VIX, yeah, you'd be sitting pretty.
You're talking to Johnny, the investment banker. So Johnny's right there with you.
I haven't tweeted that yet, right? I think I'd be going long on the VIX right now. I think what we're seeing is the macro market manifesting itself on freight, which makes sense because freight wakes up so much of the macro market. The prices are getting pushed down. You're going to see I think you already are, and this is more, my opinion, validated by some of the things we see in our marketplace, that the small folks are struggling really bad right now. Fortunately, they're probably going to go back and start driving for Uber and Lyft again, just like they moved out of Uber and Lyft and started driving, leveraging their CDL licenses. And so what we're starting to see a little bit right now is that focus, and we've taken that focus kind of from the beginning, and it slowed growth at first. And that was really focusing on the mid-size carrier, the ones that can stand some of these fluctuations, the mid-size to larger carriers, which can take a lower price per mile, can kind of wait out this storm. I think, once again, you're going to see, as these markets fluctuate, that the upside is, it's going to swing back up and they're going to get their $4 to $5, $7 per mile on the lanes that they're going to start taking rips on. Now, when is that going to happen? I'm not sure, but I guess that's what I'm seeing right now. Some of the major trends that I'm seeing are the obvious pricing trends. I'm seeing the fraud trends, but I'm also seeing that because of those trends, the foundational layer of that relationship, the human to human relationship, is so critical, particularly during this type of volatility, that we're kind of doubling down on the tools to enable those relationships. I had said before in a conversation that probably the thing that I got the most wrong, at least in my freight life, is thinking that technology, software, automation, computers were going to replace humans. And I think that while they can replace the repetitive tasks of those humans, actually replacing the human in these relationships that are so critical to this industry is a fool's errand, particularly right now. And I don't see these swings in the market really changing. As I said before, the freight market mirrors the macro market in many ways.
Yeah, there's a lot of research done by the American Transportation Research Institute. I was at a conference recently, saw Dan Murray, the executive director of the Research Institute, speak. And it's interesting how much the freight market and the sort of macroeconomic market relate to one another. It's like the freight market has been on this downward trend in terms of rates. They were really, rates were record in 2021, 2022. You actually saw more authorities come into the market than ever before. I was looking for the chart just a second ago, but I couldn't find it. But it's like the number of new authorities from 2000s to 2010s, and then post 2020, it goes like this: new authorities, everybody's buying a truck and getting out on the road. And then now there's a negative because there's such excess capacity, sorts of things. So the freight market is hitting a recession, it seems, or has hit a recession because there's so much capacity. Inflation's higher. People are maybe a little bit hesitant to spend money because they know that inflation's up. I can't buy quite as much. There's also like a backlog of goods out there. But I will say Dan Murray from ATRI, he feels that we're sort of bottoming out in the freight recession, like Q3. He always says I'm more optimistic than most, but it sort of indicates like, okay, we're soft landing, like Q3, Q4, and then back up. But it's amazing how much credence. I was talking to a family member in the mortgage business, and they said that the freight index or the trucking index is one of the ones that they look at in terms of anticipating like mortgage interest rates and like the mortgage market. That's like one of their leading indicators is the freight market. It's wild.
That is
how core it is to the economy.
And it kind of makes sense, right? Like it
Yeah,
makes sense.
totally.
The movement of goods, it makes sense to be a leading indicator for a lot of those things. One of the funny things that kind of came to mind there is anytime you have these volatile trends, you get a lot of these, and I've heard it even before I got into freight, the driver shortage. The drivers are getting older. If we don't have autonomous vehicles come in, we're going to be in really deep trouble. And I know I'm not the first person to believe this or say this, but I think it's always these macro trends and not necessarily a shortage of either supply and demand. It's supply and demand just reorienting itself as it always does.
I agree.
Yeah.
I mean, I know that consumption has slowed a little bit, but it very much seems to me like whatever's driving this is larger than whatever, buying less goods since COVID. It feels really, really hyper tied to like interest rates, and, a lot of folks bought trucks at a really bad time to buy trucks. And now we're kind of paying the piper today.
Yep.
What this makes me think is we should submit a request to like the All In podcast, because they always talk about like economic trends and like interest rates and these sorts of things. We should submit a request for them to talk about the freight market and like what they think of the freight market and how it relates to the macro.
Why would we need All In when we've got the Freight Fanatics that can talk about it? Yeah. We're the experts.
We already got it, man.
I'm gonna distance myself from ever on this topic referring to myself as an expert. I'll let you go for it.
Yeah, take that out for me too. I'm barely an expert.
Will we just roll all three of our companies together and see if Saks will invest in that?
Yes. There we go. I feel like I've had that conversation before.
Just if I get a call with Saks, man. Even to get a call with him, I'll take that.
Yeah, it'd be epic. We should go to the All In summits. I know that we're now so off topic, but that would be
that would be cool. Yeah, that would be cool.
Yeah.
It's in Vegas or something like that, right?
Twist my arm.
Yeah.
Before we get back on topic, one of the ways that, and probably leave this off, but you go into, I think going into a casino tells you more about macroeconomics than maybe anything else. Like seeing the amount of folks that are still in casinos, because there's both an addiction level to that, but there's also like, this is for a lot of folks, that's expendable income, right? Like that's income that they're willing to lose. And so like anytime that I'm like buy a casino, I'll even like just going there to see like what it looks like. And you can, I think that is a better teller. I think it goes freight and casinos, and then some of the other things that people are looking at. But yeah,
if only Vegas would like release. I wonder if there's any data out there. I feel like there wouldn't be, but if there was data out there about like how much money is being spent at casinos and like what the sort of flow in of people and the flow out of people and like the dollars spent per person per hour in the casino, those sorts of things. Like,
I mean, I'm sure they're bundling all of that and selling it to hedge funds. Like that's
got to be. Yeah,
it's got to be
for a ton of money. Yeah.
What I saw recently is like minimum table. Like I think I've usually seen tables that are like $20 tables. Now the minimum is like either 25 or 30 everywhere in Vegas that I went. Which
inflation.
That's just it makes sense. Like when I got my haircut at Tommy's barbershop today, where I've been going for 6 years, they raised the price from $20 to $25. Yeah. There's like a sign with a finger pointing to Joe Biden. It says blame him.
Yeah.
For the price change. I was like, at least they're like saying why they're doing it.
Yeah. Yeah. I've seen those on the gas pumps. Same thing on the gas pump with the like I did this to the price. Yeah.
That's fine. There's no way we're taking any of that out. That was great. What other things you want to talk about? Johnny, you might have had one or two other things.
Yeah, I mean, like one that I wanted to, like, what are the biggest challenges that you're facing as like, we're in similar situations that we're running, relatively young companies and constantly bumping into obstacles. Like for us, it's, every day is trying to figure out how to take the next step forward. Like what are you guys bumping into that's slowing you down? Like what's the anchor you're dragging?
Yeah,
Yeah, it's
that's
a
a good
great.
question because it's such a. I want to talk a little bit about this too because it's such a startup question. That's kind of what we want to express in the podcast a little bit too. Is like what's the startup exec journey and like what's it
Like
feel like to
how do
bang your
you
head against?
But yeah, so the question is, what's the anchor that's driving us back, and or what are the hurdles? Maybe is another way of saying that, right? Like how do
Yeah.
we? And so for us and for the startup and for the small team in a very large industry, having a essentially what I would consider kind of a David and Goliath problem, right?
Mm,
You have some very large entrenched folks in the space, and so the number one thing is prioritization and making sure we're focusing on the right things. And so it becomes all that more relevant when you're building a two-sided marketplace, and it changes, right? So like it starts with
mm,
one side of the marketplace, and it starts with, and a lot of people call it the chicken and the egg. A lot of people, right? Like there's a lot of super intelligent individuals that have documented the right way to do this, predicated on the type of marketplace that you're building. But a lot of it is, okay, hey, we need to put our best and smartest resources on demand right now. We really need to build that out the right way, and then at the expense of building out supply. And now we need to move those folks over to supply. So really, it's how to prioritize limited resources properly. And so, a good example of that is we started by building out the integrations into demand system of records, because we felt if you had enough freight, or at least actionable freight that was trustworthy, we could get folks to engage with it. And
Mhm.
then we went to the supply side, and it was okay. Now we have enough actionable freight. Now we need to find the right folks to engage with it and really, pour some gas on that side of the marketplace, or that side of the fire, if you will. And so it's really managing those two things properly. And I'll admit it, like I don't know if anybody gets it perfectly right. I know that there's definitely, that's the humbling piece of any business, but particularly this business, is we've gotten things wrong, and being able to identify that quickly and getting to right as fast as possible is, it's both the fun and the challenge of it.
So what are the big, and if you can't answer this, I get it, but like what are the biggest blockers to adoption for you guys? Maybe on both sides of the marketplace.
Yeah, biggest blockers to adoption. It's a great question, and it's different based on each side of the marketplace. So,
Right.
biggest blocker to adoption on the carrier side is getting folks engaged on that side. They have a lot of options. They have hundreds of options to book freight, right? And this is new. So change management for those folks, getting them to
mm-hmm.
engage digitally. And I mentioned it before on this during this conversation, is those relationships are so important. One of the things we had to really focus on was, hey, we're not getting in the middle of that relationship. We're not looking to replace that relationship. That's one of the things that I got wrong at the beginning, right? I'm looking to enable that relationship. So
Mm,
it's just it's kind of getting folks on really both sides of the transaction to say, hey, this is a cleaner, less noisy, higher signal way of transacting, and here you go. And we're only going to charge you transactionally. So we're only going to charge you when we provide value, when we get the right load in front of the right person
mm.
before a human could do that. And then you can have those conversations around the details, or you get to actually have genuine conversations with the folks that you're working with. And you're not negotiating $25 on a $1,300 spot load going from Georgia to
Right.
Chicago.
That prioritization piece strikes such a deep chord. And Johnny, I know it does with you too, because we sit next to each other and we talk about this all the time, right? Or at least I think we hear each other talk about it. It's like how do you how do you fix how do you fix things or make things better for your existing customers at the same time that maybe let's say you have a product and that product works, but you have customers that want you to like add on to that product. Small things, but like things that would make their specific workflow better. But really you have this vision of you got to get here, and maybe that product they're currently using will be subsumed here. So it's like, how quickly can you get here? And like, if you can't get there quickly enough, you feel like you have to spend development time on, the squeaky wheel here. But really you're like, could you just wait, 3 months and you'll actually be here? Look how much better this is. You feel like you should put everything towards big vision, right? Because you're going to make things better for everybody. But at the same time, you have to put dev resources towards, making this piece better. That thing's not going to be better fast enough. It's just like, there's no objective way to do this as good as possible.
Yeah. Yeah. And I think that kind of boils down to maybe the hardest problem that I have sometimes too, is it's saying no. It's saying no to it.
Yeah.
Sometimes you have to say no to like exciting things. Like, man, I really want to work on that. Like that is something that is potentially transformational. That's awesome. I can't work on it this quarter. And you're like, that's what like we're, like in general, that's what startups are supposed to do, is work on like really hard things, as quickly as possible. And sometimes in order to build the right business as fast as you can and provide the value to the right folks, you have to say no to some of that stuff.
Yeah, it's funny I'm sure you guys see it too. I feel like as organizations get more mature, as you start to talk to them, they're like, yeah, we can put that on our roadmap for 16 months from now. And like as startups, as we mature, I see ourselves saying, hey, we can work on that next quarter, where it used to be like, hey, we can work on that next week. And so as you mature, your timelines get longer because you have your own roadmap, you have your own strategy. And then as the organization gets really big, hopefully we'll all be there someday. Hopefully we won't have these like 18-month roadmaps where we can't work on anything for that long. It'd be nice to see a large organization that can be nimble and pivot, but that's sort of the whole David and Goliath thing. It's like David is always going to be faster, more nimble, able to disrupt. How can you be a Goliath with like maintaining some of those David qualities, which comes all the way back to the very beginning?
That's the name. That's the name of the game for us. I don't know. Have you guys read Malcolm Gladwell's new book on David and Goliath?
Yeah,
it's called David.
Yeah, that's exactly what I'm thinking. That's exactly the framework I'm thinking.
How like looking, if like the first chapter, I'll just give you like the 10-second synopsis, but it's basically the Goliath never stood a chance because like he was so big because of some disorder that made him grow too much. So he had like his pituitary glands were producing too much of whatever it is, so he couldn't see well. And like meanwhile, David was like a professional marksman with his sling and like threw a rock at the speed of like a 9mm shooting a bullet into your head. So it's like that's what we're trying to figure out, is how can we be David being the slingers against the Goliaths that can't move quick enough.
Well, you have to be precise, right? That's the whole point of like where you put the slingshot, like where you put the rock. Like you have to be precise, which comes back to like how do you prioritize the exact right thing at the exact right time to be precise to strike a chord or hit somebody in the eye.
Yep.
Yeah.
Another really good read that I go back to occasionally, and I don't know if you guys are familiar with it, but it's called Loon Shots by Safi Bakal. And it has
Loon
a lot
Shots?
of those. Loon, Loon Shots.
Okay.
A lot of good lessons in there, particularly from a business perspective, but it's also super entertaining. So phenomenal stories, which I like to, like if you're just like listening, I listen to a lot of stuff now too while I'm doing something else, and it's a good listen if you don't have time to read.
Okay, I'll check that one out. Spencer and I are constantly swapping books. We both did The Obstacle is the Way recently. That is a great one. Nice. You haven't read that yet.
Yeah, I'll check that out.
Johnny, my wife got me another one of his books. So I looked at like one or two other Ryan Holiday books, and one of them I was like, it just isn't really doing it for me. It's not really ringing a bell. And then she got me Ego is the Enemy, which was I can bring that in. It's a short read. It's really good. It's just sort of like a humbling book. You start reading it and you're like, oh yeah, I'm not anything more than somebody who needs to be humble, put their head down and grind, do the right things. Like do the right things. That's a good one.
You telling me that I need to read that? Telling me to take a hint?
I mean, I sit next to you all day. No. You're a very humble and self-deprecating person, Johnny.
It's easy. It's easy to be humble.
Yeah. What's easy is join logistics. If you're looking to be humble, just try to start something in logistics. It has a humbling mechanism to it. So that's all you need to do.
Mm-hmm.
Yeah, that's exactly right.
All right. I think we're coming up on time. I'm going to go ahead and sort of wrap this up.
Is there anything that you wanted to talk about that you didn't get to here? It's anything salesy or like makes you guys look sexy that you want to throw in here that you haven't yet?
What else? Anything else before we close out?
I enjoyed hanging
Johnny,
out with you guys.
John? Yeah, this was fun. Johnny, as always, or now is the second time. It's great to have you on. Appreciate your insights and you being a part of this. It's fun. John, thank you so much for joining us today. It feels like a long time coming. I know I just asked you a couple of weeks ago, but this was so natural and fun. Really appreciate it. And all the work that your team does as well. It's always good to see you guys at conferences and see you guys around and sort of have some friendly faces in the crowd as well. So thanks for joining us today.
Yeah, likewise. Thank you for the opportunity. I'm always appreciative and grateful to chat one of my favorite topics with folks that I enjoy chatting with, and hopefully it provided some value to other folks. But yeah, thank you.
Yeah, this was fun. I enjoyed it, John and Spencer. I see a lot of you, but it was nice to mix it up with someone else and chop it up. And hopefully three of us can find a way to partner together and, keep trying to chip away at this.
Yeah, very good.